Right, hello everybody, and welcome to the Trade of the Day for the 6th of October. My name's Tom, I'm a senior trading analyst here at Trend Signal. I want to run you through a few of our intraday trading positions that closed out with about £1,000 profit, 341 pips to be precise, on the Friday afternoon from about 2:30 till about 10 past 3. So we also had another trade generate a little bit later on. It worked out as about an hour and 10 minutes of trading. Essentially. So let's jump in. So on our intraday strategy, we've been teaching people to trade this for a long time now. We've been teaching people in general since 2003. We detect the entries by looking for the arrow flips on the charts. So what happens? We have the previous trade, whether it's a legitimate trade or not, if we're just scanning for one, we hit the black arrow, we flip over, and we start to look for an entry that we can take. So this was on the market open at 2:30. We flipped into a buying position. Arrow is outside of the blue bands, telling us that we're looking at a potential high energy trade. We then go through a 5-step process, which I'll go through quickly. It's a little hard to see on this one because it's quite compressed from the movement that came afterwards. But we go for green vector averages, these two lines down here, looking at short-term momentum. We then have a look for the candle position. Now, where it's outside, we just need to be in the top half of the channel. We then look for the R ratio. This is an in-house tool, basically making sure that we're wide enough. You can see it on the top left. Hover over the candle, you can see it's 18.3. We are. And then finally, we can respect the trend. In this case, it's in our favor, but because it's outside the bands, we actually don't have to. We're more than willing to trade against trend because there's a lot of pent-up energy. So we're in the trade, and of course, people will manage this trade as they see fit, but something that most beginners will try to do initially is just follow along the trading black stops. This goes from your initial kind of emergency protection to eventually bringing you to break even and then locking in the profit as you go to make sure you're not getting too greedy. In this particular case, we went from 2:30 up to about 3 o'clock. This move was 164 pips to the black stop. There were more pips in this, moving up to about 200 pips if you were managing this trade actively and trying to take the best possible exit. But it worked as 164 pips, as I say, in the best part of half an hour. We then get the next opportunity. Now, as you can tell, this one wasn't too good. Luckily, we didn't take it. Our arrow starts inside. Now, what that means, we go through the rules again. Vector averages, these two green lines, these need to be red because we're now looking to sell the market. They're not, so we don't take it. We do eventually get red vector averages, but the next one we need to look at is candle position needs to be all the way down by the purple. Never happens. It means that this trade becomes filtered. We never take it. What actually happens is we consolidate, we push back up, and then we re-enter for another buy a little bit later on. Same again, we're inside. Green vector averages. Candle needs to be over the purple, which it is. We need the R ratio to be positive, which it is in the top left. We can see it's 163. It's very positive, very stretched market. And finally, we need to be in line with the long-term trend because it's not a super high energy position. We are, and we get in, and it's not explosive by any measures, but it slowly crawls up over the next half an hour or so. We eventually close out when we hit the black arrow, before we cycle back into looking for a sell position going into the later stage of the market. This move in particular was slightly better. So the black arrow is 177 pips worth of profit. So what does that mean altogether? We've taken the sum of them, 341 pips. If you're trading in a beginner-sized account, £1 per pip, it's £341 for the best part of an hour's work. If you're trading even at an intermediate size, you don't need to go too crazy to see serious returns out of this. £3 per pip, it's about £1,023, again, just for an hour and 20 minutes work. If you want to see how to take trades like this, but more importantly, see us trade it live and potentially trade alongside us if you're interested, we'll be doing a session later today at 12:30. There'll be a form around this video. Come and join us, and we'll show you what intraday trading is all about. Hope to see you soon.